Hey everyone, thanks for joining another episode of Finance by David. And today we're going to have a segment to talk about the mortgage news that we've been missing. All right, let's jump on in. So, home prices expected to rise 4.1% in 2025. Are you kidding me? After high interest rates and high prices, we're still expected to go another 4.1% higher in value. Let's check it out. So, home sellers cut prices slightly in January, but housing costs are expected to recover and rise to new heights in 2025. According to a forecast by CoreLogic's Home Price Index, the index shows that January home prices fell 0.2% from December levels. However, home prices on a year-over-year basis are expected to rise 4.1% between January 2024 and January 2025. Now, if you have bought a house in December, you know that there are not as many houses selling in December. Why? Because we have vacations, we have Christmas, we have family time going on, and families want to spend time with their family and not with your realtor or your lender looking at homes. Now, there are still transactions that go on in December. They are just not as many as during the year, or for example, say summer. When kids are off from school, families are home hunting, they have a little bit of extra time, a little bit of extra money, and they're not going through a holiday. So, moving on to our next story, the strong job market may result in fewer interest rate cuts this year. Well, jobs are obviously good, but high interest rates are not so good. So let's see what the difference is here. The US created 143,000 jobs in January. Unemployment rates fall to 4%. Now, let's get into some details about this. The number of jobs created in January was less than expected as employers hired a seasonally adjusted total of 143,000 people from the month. Still, unemployment rates decreased slightly to 4%, according to the Bureau of Labor Statistics on Friday. This was Friday the 31st. Job growth was below the monthly average gain of 166,000 in 2024 and way below December's upward revised total of 307,000 jobs created. But overall, the largest job gains were seen in healthcare, which increased by 44,000, followed by 34,000 of retail employees and 32,000 new government employees. Social assistance added 22,000 jobs, and mining-related industries lost about 8,000 jobs. Let's move on to our next article. Consumers remain pessimistic about buying and renting. Now, there's a double-edged sword. You either want to rent and not lift a finger when something goes wrong, or you want to be a homeowner, own your own space, and just deal with everything that comes along with being a homeowner. Remember, it's not just your principal, interest, taxes, and insurance. Some of us also have mortgage insurance with an FHA loan, and there's always maintenance. We can never plan when a situation is going to happen. Let's say a pipe starts leaking, or you need to replace your microwave or your refrigerator, or maybe you need to install a water softening system. But these things all happen, and it's your responsibility if you're a homeowner. I think it's worth it. What do you think? Fannie Mae found 78% of those surveyed said now was a bad time to buy. Why is now a bad time to buy? Let's check it out. Renters and homebuyers began the year pessimistic about home affordability, according to Fannie Mae. While attitudes about the market among surveyed consumers and modestly improved overall last month, a growing share expects home prices, rent prices, and mortgage rates will go up, Fannie Mae reported. So not just your mortgage interest rates are going to go up, but the property values, your monthly rent, it's all going up. Of course, I think this is due to inflation. The dollar is not worth what it used to be worth. So you're having to spend more of them in order to still cover the same thing that you would have bought last year. Now, unfortunately, incomes are not increasing that much, so make sure you're doing your job and your part in increasing your income to keep up with these levels in inflation. If you work for somebody, talk about a raise, or maybe getting some extra education, extra certifications, figuring it out so that you also increase your income in salary according to what the market is doing in terms of cost. Consumers seem increasingly pessimistic that housing affordability conditions will improve across the board. I think that prices are definitely going to go up this year. Last year, I assumed that interest rates are going to go down. I was wrong. Unfortunately, we took a very big hit with inflation and the artificial adjustment of rates going down during the COVID pandemic. That caused a shock in the system. Not only for mortgages, in multiple industries, we felt this change, this increase in prices. And obviously that means that you have just a little bit of less customers because everything is a little bit more expensive, right? Moving on, Scott Turner confirmed as Trump's HUD secretary. Okay, we have a new secretary for the Housing of Urban Development. Scott Turner was confirmed Wednesday by the U.S. Department of Housing and Urban Development. The former NFL player, a Texas representative and White House aide, was confirmed by the Senate 55 to 44 votes. Turner, 52, was named the secretary of the federal agency which develops and manages programs to provide affordable housing to lower-income families. The agencies also administer fair housing laws. Much of HUD's budget is used for housing assistance programs for lower-income families, the elderly, and disabled. Now, I want to break something down. The Housing of Urban Development also works hand-in-hand with Fannie Mae and Freddie Mac. They help set up funding and guideline rules for lending. Now, they're not just a company, they're not just an organization that focuses on low-income housing. They have to do with housing all across the board in every single state. So sometimes these articles are written to show that the organization has only one priority, but that's not true. They actually are involved in all kinds of housing. Even if you have a multi-million-dollar home and it's not considered low-income housing, you're still going to be affected by HUD's rules and guidelines if there are any changes made. Moving on, mortgage rates fall for the third time straight. Mortgage rates fall for the third straight week. Well, let's just give a thank you prayer to the mortgage gods for helping us with lower interest rates. Obviously, that's good for everybody. We want to give you the best interest rate. We want to give you the best payment, the lowest payment actually, and we want to make sure that customers are happy with their commitment because remember, mortgages are for 10, 15, 20, 25, 30 years. 30 years, which is actually the average. So let's read a little bit about what they have to say. The 30-year fixed mortgage rate fell for a third straight week, reaching an average of 6.89%. It's not that good, but hey, anything lower helps, right? February 6th, down from last week's average of 6.9, according to Freddie Mac. Interest rates in 2025 peak at 7.04%. We're barely on February 7th. For the week of January 16th, since they have gradually decreased to the current level of 6.89. 1 year ago, this week, the 30-year interest rate was 6.64%. So in reality, yes, interest rates went down for the third time in a week, for the third week in a row. But if you compare this week to the exact same week last year in 2024, we're still at a higher tier. So in reality, I think the government's doing some damage control here. The feds are trying to start artificially dropping the rates, but they're not doing it in a dramatic change like when the rates went down 2 points in a quarter. I mean, that's a shock to the system, right? The property values take time to adjust to these lower rates. So what happened? Everything shot up in value when it should have stayed stable because we were going through a pandemic. Everything was basically closed. That's all I have for you today, folks. Thanks for tuning in. Remember, if you need a loan estimate, if you have a home loan scenario or just a question, we're not going to charge you for questions. Reach out on the link below. Call us, email us, text us, and happy home hunting. See you next time.